Good afternoon, everyone. This is Abid Khan, and you are watching Karachians Academy YouTube channels. We have started series of videos on past paper solution, and we have selected CIE AS level accounting paper 9706. So MCQs based paper, uh, paper 1 version 2, and we have selected the latest attempt of May-June 2022. So we have done with question 22 questions. So now we will do question number 3. So please move on to question number 23. We have done all of these questions. Last one was 22nd. So we will do 23. Q Limited employs machine operators and supervisors. Each machine operator produces 100 units per week. One supervisor can supervise up to 10 machines, 10 machine operators, and is paid $550 per week. This is supervisor salary. One supervisor salary is $550 per week, and he can, and up to 10 machine operators he can manage or he can supervise. Production is 7,700 units. Which type of cost is the supervisor's pay, and how much is their total pay per week? So you have to calculate total pay per week and the type of cost. The type of cost, you know, it is not a variable, it is a fixed, but supervisor can control up to 10, and if it is 11, then we have to appoint another supervisor. So this is a stepped cost. So as far as the answer is concerned, so stepped cost, these two are very much clear. See, this is not possible. So C and D are not possible. So our the options that applicable here are A and B only. C and D are not applicable. So we have to calculate total pay per week of supervisors, right? So first we will see how much. You see, one supervisor can supervise up to 10 machine operators. One can 10 machine operators, right? So 100 units per week, they are 100. Each machine of one machine operator can produce, and one supervisor can one machine can produce 100, and there are 10 operator, so which a supervisor can control. So 10 operator is means how many units will be produced? 1,000 units. These are the 1,000 units you will be producing. And how many units you have produced? You have produced 7,700. Means with this 10 operator, you can produce only 7,000. Per machine you can 10,000. So how many machines you have units you have produced? 7,000. It means the 7 supervisors one supervisor produces 1,000. So 10 supervisors can produce 7,000 units. You know, one supervisor through 10 machine can produce 1,000 units, and you have produced 7,700 units. It means 700 for sure, 7,000 units are for sure through the 7 supervisor. So 7 supervisors will produce 7,000 units, and the remaining 700 units you will appoint another supervisor, because this is a stepped cost, right? So you will one supervisor you will appoint he will produce one, he will manage machine to produce, so how many units? 7,700 units. And how much supervisors you will require? 8 supervisors you will require. What will be the cost per week? So for 5 weekly pay, weekly pay 8 supervisors multiply by their 550. Eight into 550, 4,400. This will be the weekly cost of supervisor salaries, right? So our answer would be, this is okay, this is wrong, so this is wrong, so last one, this is okay. So your answer is B. Move on to question 24. What is limitation of absorption costing? So you have to define the limitations of absorption costing. You know well, absorption costing that does not split the total cost into fixed and variable cost. So it consider but all the costs and without any mention to the fixed and variable cost, right? This is absorption costing. Another costing is marginal, where we split the cost into the fixed and variable cost, and we consider the variable cost, and that marginal costing helps us to in short-term decisions making, right? So based on the marginal costing we do. So the limitation is what? It does not comply with the accounting policies. It does. So it is not applicable. This is not the limitation, because absorption costing comply. It does comply with the accounting principles. So this is not it is not a non-compliance. So it does not take into account all cost of production. No, it does consider whole cost of production. So this is not the limitation. It is not accepted for preparing published financial statement. No, it is. It does, and it is accepted because all our financial statements are prepared based on total cost, which is the absorption cost. So it does. So the question is saying it does not include. No, it does. So this is also not. It is not useful for improving the organization's performance. Yeah, this is right. So this question is wrong. This question is wrong. This option, A, B, C options are wrong. D, it is not useful. Yes, for short-term decision making and for business performance to a micro level, to the drill down level. So your marginal costing helps you a lot, and based on, because their cost is divided into fixed and variable fixed cost is fixed cost, but the variable you can control through the lesser number of units produced. So the business performance you can better judge through marginal costing and not absorption costing. So their absorption costing is not helpful in business performance. It gives you a total figures of our company's performance, means profit or loss, total, but it will not bifurcate that or give you, it will not give you more details about the cost component and all these things. So this is the basic limitations. So answer is D. Move on to question number 25th. The following information relates to one accounting period. Okay, fine. Opening inventory they have given you, right? Just 1 minute. So they have given you opening inventory. Fine. They have given you opening inventory and closing inventory. Opening inventory 40,000 and 44. There is an increase of inventory increase is 4,000 unit. Incremental increase is 4,000. Absorption cost profit is 284,000 and marginal cost profit is 250,000. what was the overhead absorption rate per unit during the accounting period. So they are asking you what was the overhead absorption rate. Actually, overhead absorption rate you can find out from the inventory. When you work out the closing inventories, it does include the cost of overhead charged to those inventories, right? So the overhead cost is basically charged onto that. Under the marginal costing, we do not consider the fixed cost, right? Only the variable cost we do consider while calculating the inventories, right? So what happens when we, but in absorption costing, and when we work out our overhead absorption rate, we consider the fixed cost. So our overhead absorption rate does include the fixed cost, right? So the inventory calculated under absorption method will include the overhead cost, and it means when you will deduct this inventory under absorption costing, the higher the inventory, higher the profit, lesser the inventory, lesser the cost. Under absorption costing, your closing inventory is high, is overstated due with the inclusion of fixed costs into your factory overheads. That is why your profit is increased. So if we see in absorption costing, your profit is 284,000, and here under this it is 50,000. So marginal costing profit is less, and absorption costing profit is more, and this is because of the fixed cost included in the closing stock. So the difference of profit is basically 34,000. So incremental or differential, you can say differential. Difference of profit 34,000, and opening closing inventory, the difference of the unit increased are 4,000 unit increase, right? So the 4,000 units that have increased in closing inventory do have the fixed cost in it, right? You simply, what you do, you simply, if you want to work out the absorption rate, so absorption rate, you can work out overhead absorption, and you can work out by differential of, this is the differential of profit, which is equivalent to the differential of cost of the inventory. This is the 34,000 is the difference of cost in inventory divided by the difference of units. You just divide this by 34,000 divided by 4,000, you will get 8.5. So your overhead absorption rate is $8.5. So your answer is D. Now move on to question 26. The selling price of a product, the selling price of a product remains constant. Fine. In which circumstances will the break-even point in units decreases? Break-even point decreases. Increase in labor cost per unit, decrease in material cost per unit, decrease in variable cost per unit, increase in total fixed cost. One thing is very much sure. When the cost, your fixed cost will increase. So to cover up that fixed cost, you will have to increase your break-even point. So what it is saying, which circumstances will the break-even point unit decrease? So one thing is for sure, this is not applicable. This is wrong, because when actually the break-even point where no profit, no loss, right? And if you have the contribution at the break-even point, you have the contribution that can simply meet meet your fixed cost, and not above that. If you increases the fixed cost, then you will have to increase your sales unit. So your break-even point will automatically increase. So the fourth one is not applicable. Now come to number 1, 2 and 3. This I can where your contribution margin will increase. So you will need lesser contribution to cover up your fixed cost. So where the contribution margin, how the contribution margin will increase? By decreasing the variable cost. So here, increase in labor cost per unit, we can if I say, I'm just we can take a very simple example, and where we can do it here. I'm saying in the given, this is given option, which is sales price is, I'm saying this is fixed, so this is 100. In option number 1, this is also 100. This is option 1, 2 and 3. So option number 2, this is also 100. So because sales price are constant, we are taking this example only. So by very short example, this is sales price, right? And variable cost. So variable cost, if I'm saying it is 80, so variable cost, we will see how much. So if it is a variable cost, then contribution per unit will be 20, right? So this is contribution. This is an example, and this will help you to understand this. The sales price is constant. Number 1, increases in the labor cost. If your labor cost increases per unit, your variable cost will increase. I am saying labor cost is increasing by 10 per unit. So this will be 90. So your margin will go to 10, right? And its percentage will be 10%. So this will be 20 over 10%, right? Like decrease in material cost per unit. If your material cost is 80, I'm saying this 10 will be decreased. So this will be total variable cost will decrease to material decreases by 10 per unit. So this will be decreased to your contribution margin will become 30, right? So contribution margin percentage, contribution to sales ratio, your contribution margin percentage is 30. Here in fourth, decrease in variable cost per unit. So total unit cost is decreasing. I'm saying total variable cost is decreasing by 10. So again it is, if I am saying decreasing by 10, so this will be 30. So will remain 30%. So you know what is happening here, where the contribution margin in number 1, contribution margin is decreasing. When labor cost is increasing, the contribution margin is decreasing. Contribution margin is decreasing, then you have to sell more to, so this option is not applicable, right? This option is not applicable. Number 2, where material cost decreases per unit. So your margin, so contribution margin, so this will be, sorry, if option 1 to 90 is increased, then 30, right? So your contribution has from 20, it has increased to 30. So your margin has increased. So you will be needing lesser unit to sell to cover up your fixed cost. So this is applicable. This here your break-even units will reduce. Here where the margin is increased from 20 to 30, so your margin is increased. So in lesser number of units you will cover up your fixed cost. So this is also applicable. So this is also correct. So option 2 and 3 are correct. Now move on to, so your answer is B. Move on to question 27. A company makes and sells one product, just 1 minute. A company makes and sells single product. Okay, the product sold 50. Variable cost 30, means contribution margin is 20. 50 minus 30, 20. Total fixed cost 500,000. How many units of the product does the company needs to sell to make a profit of 300,000? So the formula is very simple. We know the contribution margin is always equal to the break even sales is always equal to fixed cost over CSR. Yeah, contribution margin, the fixed cost, this is product 30, fixed cost, how many units? Okay, in units, they are asking in units. So break even in units, fixed cost divided by unit contribution margin, your contribution margin per unit, right? This is the formula. But if you want to add something more, and if you fixed cost, you want to add some profit as well, so unit contribution margin, and then this will become your sales break even plus desired sales. So this will be your desired sales units. So how many cost is there? 500,000 is the cost. How much profit you want to earn? 300,000. What is your contribution? This is unit contribution 20. So your desired sales, DS, desired sales units, would be 800,000 divided by 20. So this would be 800 by 20, 40,000. So your desired sales units will be 40,000. Option D. Move on to question number 28. A business makes and sells 3 different products, M, N, O. Following information is available. So they have given you M, N, selling price, then direct material, then direct labor, then variable overhead. We can work out its contribution per unit. Right, the time is, we have a very short time. So contribution margin would be, if I deduct 240 minus 110 and then minus 65 and 20, 85. This will be 45. Just 1 minute. Your contribution, this is contribution margin per unit. So this is 45. then 280 minus 120 and 90, 30, 120. 40, right? And then 250 minus 190 and 25. 190 and then 25. 33. I think some mistake. 250 minus 90 minus 120. 35. So these are your contribution margin contribution. So each product uses the same direct material, which is in short. So this is the limiting factor is material. So you have to consider the material factor. Then limiting factor, with respect to the limiting factor, you have to work out your contribution margin. So contribution margin per unit of material or per dollar of material, we will see contribution margin per unit of material. So how we will work this out? 45 is the cost, the margin. How much material you are using? 110. I can say you can take out the percentage. So this is 41%. So margin is 41% here, and 40 is your contribution margin divided by the material cost. It is your margin with respect to material is per unit of material is 33.33%. Then again 35 is your contribution, material cost is this much, so this is 38.89. In which order of the priority should the products be produced to maximize the profit? So ultimately, the higher we are earning in M, so first we will produce M, then we are earning in O, then we will produce O, and then lastly we will produce N. So material is short, so first we will use material to produce M, then remaining material O, then whatever is left over will be used to produce N. So this will be MON. So your answer would be B. Now the last question 29 and 30. So move on to question 29 and 30. We are running short of time. The video is becoming longer. I have to short it down. So to evaluate, okay. Just a business has the following information: break-even point 5,000 units, variable cost per unit 27, contribution to sales ratio. This year contribution to sales ratio (CSR) is 40%. This is contribution margin ratio. We also call it contribution margin. CMR, you can say contribution margin ratio or CSR, whatever you say. So break even, and what is the total fixed cost? You have to work out total fixed cost. How would you work out the total fixed cost? Just think out, and what I think what is CSR? Contribution to sales ratio. This is contribution margin divided by sales, right? So this is CSR equals to contribution margin is sales minus variable cost VC divided by sales. So this is CSR. So CSR is given to us is 40%. Sales price are not given. We will consider them and assume them as S. VC per unit is given to you is 27. Again, sales is not given to you, right? If you simply cross multiply, and so how would you come to S minus 27 will be equal to 40% into sales, right? S minus 27 will be equal to 0.4 of S, right? You just do one thing, bring it here this side of the equation and bring it here this side of the equation. So S minus, when 0.4 S will come here, this will become 0.4 S. When this minus go to other side of the equation, this will become 27. Then you can say S, this is 1S. So S minus it means this is 0.6 S is equal to 27. Then selling price is equal to 27 upon 0.6. So your selling price will become 27 by 0.6, 45. Your sales price are 45. This is clear, right? And we know the break-even point. The break-even sales means this is what? This is break-even sales is what? Break-even unit into sales price. Break-even unit into sales price, that is called, in the break-even sales in dollar, is equal to, this will be equal to fixed cost divided by CSR ratio. CSR. We have break-even sales. Break-even sales, because you can work out the break-even sales. Break-even sales you can work out. You have units, you have 5,000. Price is 45. So you simply multiply 45 by 5,000. Your break-even sales will be 225,000. So you have this 225,000. CSR is 40%. Fixed cost you want to work out, you simply cross multiply, then your fixed cost would be equal to 40% multiplied by 225,000. So fixed cost will be equal to, simply multiply 225 by 40%, 90,000. So your cost will be 90,000. So your answer will be C. Now move on to last question, because we are running short of time. Video is becoming longer. So why does the business prepare budgets? To assess their non-financial performance? No, it is not. To control their expenditures? Yes, this is right. To strategically plan several years ahead? No, this is wrong. To evaluate assets and liabilities? No, this is wrong. Your answer is B. So guys, that's all for today. So we have done with this paper. So if you have any question or any doubt or any clarification, you can write your comment on below of this video, and we will try to get back to you as quickly as possible. Hope this video will be helpful to you in your next month's exams. Thank you very much, and bye for now.